Hello, everyone. Just wanted to jump on here real quick and let's talk about some here. Get my background together. Yes. Now you're gonna see me looking this way because my notes are on the screen. Uh, but maximizing your tax return, how to open a retirement account. One of the things I wanted to talk about is in the 2022 last year for the 2021 filing season, the average tax return was around $3,000. Now, imagine for those of you that don't have retirement accounts, investment account, if you would have took a third, not your whole tax return, but just a third of that and open a retirement account, whether it's your first one, whether it's your one outside of your employer, or if you just open your an additional retirement account. That way, you're diversifying your portfolio. So on this show, we're going to talk about just two types of accounts: Roth and traditional IRA. Right. So just to differentiate each one, uh, a traditional IRA, what that is that is pre that's pre-tax dollars. Had a brain fart there. I'm sorry. That's pre-tax dollars, meaning the money you're putting into that IRA, it hasn't been taxed yet. So it's tax deferred, meaning it's going to be taxed at it's going to be taxed at the age of 59 and a half or later, because that's when you take it out. So it's going to be taxed, initially taxed at that time, right? Traditional is taxed later. Roth is already taxed. Um, so with the Roth, and my phone would ring. Not sure what that is, so we sending them to the voicemail. But with the Roth IRA, uh, that account is already taxed, so you'll get paid. That money's already taxed, and then you will invest it. Versus a traditional, you'll put that money into an IRA account, and then the rest of the money is taxed afterward, and that money hasn't been taxed yet. With both accounts, you can pull them out at 59 and a half years old, tax free, um, with no penalties, no penalty withdrawals, tax free after 59 and a half years old. Well, why I got to wait till I'm 59? Because that's generally retirement age. With the Roth, yes, you can pull it out earlier than 59 and a half. But once again, we're talking specifically retirement accounts. So we're looking at later years of life. Roth, you can pull it earlier, but we're focusing on later years in life. So we're going to stick with the 59 age, 59 and a half. The difference between a traditional and a Roth is always after tax. So whether it's a Roth IRA or Roth 401k, uh, whatever type of Roth account, Roth means it has already, your contributions, whatever you're putting in, has already been taxed. Traditional IRA, it hasn't been taxed yet, right? So those are some of the benefits of having the different type of accounts. And so what we want to do is when you get your tax return this year in 2023, take a third of your tax return and open an investment account, open a retirement account. Whether you want to do Roth or traditional, that's totally up to you. But open an account so that you can build generational wealth. Open one for your children if you can. Open you a secondary account if you already have one. If you have an employee if you have an employee sponsored account, open one up outside of your employer. That's huge right there. So you want to make sure you're diversifying your assets, your investments. Open an account outside of your employer as well. That's it for today. Hope you have a blessed day.